Hello everyone, in this episode I'll be talking about the Leo token, about Bitfinex in general, about the New York Attorney General case against Bitfinex, and what it all means for the Leo token and Bitfinex. As always, please comment, like, subscribe. As always, please open a new account with a new email with my links, which you can find in the description below. These links can give you 10 to 20% trading fee discounts on BitMEX, on the Deribit and crypto facilities. Right, so let's start with a bit of a background. Bitfinex has been the biggest exchange after the collapse of Mt. Gox, and it has been a very respected one. They had massive volumes, they were the biggest order book, and only a few years ago BitMEX has taken over as the biggest crypto marketplace. Up till recently, Bitfinex remained as the exchange with the biggest order book. At the moment it's almost tied with the GDAX, but you could argue that Bitfinex has a bigger order book with some hidden orders. There is also liquidity in different currencies. There's also Tether order book. So Bitfinex is this massive exchange, which is also different to other exchanges because it allows a decent deal of privacy. So on all these other exchanges you need to get verified, you need to provide all the KYC, AML information, while in Bitfinex only selected users have to submit that. And it's the increasing number of users that have to comply to all the rules to trade on Bitfinex. But Bitfinex still allows unverified accounts which do not need to submit all the KYC AML information for non-USD, non-USDT purchases. An important thing is also creation of Tether. So there is a company, Tether, which is run by pretty much the same people as people who run Bitfinex. They are all part of the iFinex company, like an iFinex brand, which also contains Etfinex, Tokenomics, and some other ones. And Tether is a very successful company which has issued large amounts of tokens which are backed by US dollars. They are supposed to be backed 1-to-1, and they were supposed to be audited, but there were some troubles in the past. And essentially, New York Attorney General has audited Bitfinex and has figured out that they have almost all the money, but they were missing some part of the funds, but we'll get to that. Bitfinex also had some trouble in the past. They were hacked. They were not able to repay the money that has been stolen during the hack. They have issued some tokens which, in my opinion, have been repaid, and they have dealt with it really well. The USD value of the stolen funds has been repaid. Some people can argue that they could have dealt with it better, but I think they have dealt with it really well. Also, Bitfinex is a largely successful platform, and they have large amount of funds. They have generated 130 million in profit, and this is profit. This is after all the costs in 2017, and 250 million in profit in 2018. So that means that they are big, they are successful, and they are generating a lot of income from their trading fees. And we cannot forget that Bitfinex is actually a very advanced and a very complex platform. You will not find as much security features, as much complex trading features as you'll find on Bitfinex. They have large margin market, they have very robust funding, so they are, in my opinion, the best marketplace in crypto, which can be tied with BitMEX, which has a different trading profile really. But in terms of being a spot exchange, I think they are hands down the best. So this is my view on Bitfinex. Essentially, a great platform which goes with the spirit of crypto, allows a great deal of anonymity. They are big, they are profitable, and as with any crypto exchange, particularly with one which does allow a decent amount of privacy, they run into trouble with processing withdrawals. And they were using some different banks. They had to change their banking companies, and they were doing that actually quite a lot. And at some point around 2018, they ran into a lot of trouble, and they were using a shady company which was processing withdrawals for them, which was called Crypto Capital. And I think there were some arrests in regards to this Crypto Capital company. Oh no, that's probably not the one. Yeah, that is Crypto Capital. And it is the company which was essentially a shadow banking service. So they were not a bank, but they were acting as a bank, and they were processing withdrawals for Bitfinex, but also for some other troubled exchanges. And as you can imagine, this shadow bank also ran into some trouble. As far as I know, and this is just my opinion, I'm not very familiar with the issue, they were pretty much criminals, and there were some arrests in relation to Crypto Capital, and as a result 850 million of funds which belonged to Bitfinex have been frozen, and this is what Bitfinex claims. But New York Attorney General claims that this money is just missing, and these funds will never be recovered. So Bitfinex runs into all these trouble. The premium on Bitfinex versus all the other exchanges spikes quite a lot as a result of difficulties with their withdrawals. So people cannot withdraw US dollars from Bitfinex. This is why they are converting their holdings on Bitfinex to Bitcoin, withdrawing them and selling them somewhere else. And this is why the price of Bitcoin on Bitfinex was pretty high for a decent period of time in 2018. That probably prompted New York Attorney General to look into the issue, and the Attorney General uncovered a lot of facts, and they have discovered that Bitfinex has borrowed around $1 billion from Tether. Now, who is a New York Attorney General? It's a pretty significant attorney in US, and they can investigate a lot of things, and under some Martingale Act, they are allowed to investigate this. Maybe yes, maybe not. This will be up to the judge to decide. Anyway, the New York Attorney General had a very good case for saying that Bitfinex has borrowed money from Tether, and that Tether is no longer backed, and that people using Tether are at loss, because this Tether was supposed to be backed one by US dollars, and now it's not. Instead of being backed with dollars, it is backed by a promise of Bitfinex repaying this money. So the New York Attorney General's case was that Tether is no longer backed one by US dollars, and that customers have been harmed, and that Bitfinex should not borrow any more money from Tether, because they can just drain the Tether to the zero, and it will be backed not by US dollars, but it may end up being backed only by promises made by Bitfinex company, which is part of this umbrella company iFinex. So this was the New York Attorney General's case. They want a lot of documents to see what exactly has happened, and they want Bitfinex to stop borrowing money from Tether. And this was the cause of this preliminary injunction, which the New York Attorney General has issued in, I think, April to May 2019. And the preliminary injunction is supposed to serve people who, well, it is supposed to be granted in courts of United States if there is a substantial likelihood of success on the merits of the case, if there is substantial threat of irreparable damage or injury, if the injunction is not granted, if the threat is imminent, if the balance of harms weighs in favors of a preliminary injunction, if there is no other available remedy, and if it would serve the public interest. And at that point, when the preliminary injunction came into was issued by the Attorney General, it was a very valid case, because people who thought that their tethers are backed by dollars were backed by a degree of tethers. I think it was like 73%, versus the rest was promises from Bitfinex company that Bitfinex will repay this money in the future. And at that point, the Attorney General had a very good case that these people will get harmed, and they asked Bitfinex to stop borrowing money from Tether. However, Bitfinex has done a remarking move, and they have issued this UNUS SED LEO token, and essentially they have sold this token to some selected users for $1 billion. And this $1 billion is enough to repay all these loans, and they have already repaid 100 million of this loan. So the whole case of the New York Attorney General that Bitfinex doesn't have the money to repay the loan is no longer valid, because Bitfinex has just gained $1 billion in a liquid form. Essentially, it's in the form of Tether, so they can at any time repay the full loan if they wish to. They only repaid 100 million so far, but if pressed by the judge, they can repay this immediately, and there will be no longer any valid case for the preliminary injunction. So what is this Leo token, and how did Bitfinex manage to get $1 billion from private investors? So this is a utility token. There's only supposed to be 1 million of these 1 billion of these tokens, and they have been sold at $1 each at the beginning. This is actually the profit of Bitfinex. So the tweet from Larry Cermak is actually giving different numbers to the ones given by Bitfinex. The numbers given by Bitfinex are higher, and there were a lot of dividends to shareholders. So essentially, what Bitfinex is selling is 27% of their consolidated revenues of iFinex, which consists of Bitfinex, Tether, Etfinex, Tokenomics, and that's actually quite a lot. What else it does, it gives you some discounts, but these discounts are pretty much unimpressive. So they give you fees on, they give you rebates on taker fees, which are not that big. They also reduce the lending fees, which is also not that big. So this could be useful to big trading companies, which are liquidity takers, like arbitrage bots, triangulation bots, which rely on spotting some inefficiencies in the market. So there will be some parties which will want Leo token to reduce the taker fees, but a typical trader will not really benefit from holding a lot of these Leo tokens. They don't reduce the maker fees, and that's the main take-home point. As there are new derivatives with up to 100x leverage, there will be more interest in having the taker fee reduced because the derivative, the 100x derivative based on USDT, is going to have much more liquidity than the current spot exchange. So the bottom line is the Leo token allows the holders to have some discounts, but they promise to burn the specific amount of Leo token, which equals to 27% of their revenue. And this is the website which tracks this. No, not the one. This is the one. And they have already burned 0.4% of all the Leo tokens. And that gives this token the best tokenomics, which is a merge of economics and token in the whole crypto, tokenomics, or some people call it nukenomics, because it essentially means that if Bitfinex company survives and continues generating profit, nobody is ever pressured to sell Bitfinex. There are no miners who have to burn electricity in return for Leo, but there is a company which is forced to burn specific amount of Leo every hour, every day, every month, every year. So they have made this promise, and we have to believe them that they will keep this promise. I think it's fair to believe them that they will keep this promise. So holding a Leo token, it gives you some minor discounts, which will be beneficial probably just to some big companies, big entities, big traders, probably not for you. And it gives you a claim on 27% of Bitfinex revenue. As long as Bitfinex survives and remains a decent player, this Leo token should go up, and it can go to some crazy values, because there are no miners who have to sell their Leo to pay for electricity, and Bitfinex is forced to keep buying it. There has never been a token like this in crypto, and it has a huge upside potential if Bitfinex survives. So let's talk about the risks to the survival of Bitfinex. This preliminary injunction is obviously a big risk. The Attorney General now focuses on the grounds for the preliminary injunction. It seems like it's not their motion to get the preliminary injunction is not valid because it doesn't really meet all these things. Bitfinex already has 1 billion Tethers, and it can repay all the loans, and they can do that instantly. So it's no longer a threat. They are no longer borrowing money from Tether. So I think that the grounds for the preliminary injunction are not met, but the Attorney General is part of this big US law machine, and US has already a lot of data about exchanges, users, crypto users, and they really want information on Bitfinex users because this is probably one of the last anonymous exchanges, and they will get this data one way or another. At the moment, the NYAG Attorney General wants the documentation from Bitfinex. They keep speaking about these unverified users, and they will probably get all the information about these unverified users one way or another. And they are accusing Bitfinex of serving New York customers, and that has been true. They say that they've stopped taking US citizens from around 2018, 2019, and they actually did, but there were some users that sneaked in. So the New York Attorney General says you have plenty of unverified customers. Tethers have been used to trade securities. Some New York users have been using the platform, and essentially the New York Attorney General wants documents from Bitfinex, and Bitfinex says we don't want to give you documents. In the end, probably these documents will end up in the US US government institutions, but will that be this way? Will that be another way? It's difficult to tell. And the New York Attorney General is right that there were some US customers using Bitfinex, and they will probably give Bitfinex a fine for allowing US citizens to trade securities on that platform. It will probably be huge, but I believe Bitfinex will be able to repay this easily, to pay the fine easily, and that it will not be very damaging to the platform itself. However, on the other side, the New York Attorney General claims that this motion is very damaging to the platform, and that selling this Leo token was a very risky move, and the Attorney General obviously wasn't happy about this because it essentially obliterated the New York Attorney General's case against Bitfinex. So we have this Leo token, which is supposed to go up as long as Bitfinex stays alive. It went up to about $2, but then the New York Attorney General said that despite the issuance of the Leo token, the whole situation is very damaging to Bitfinex and their whole model, and people started selling the Leo token. It looks like the price has flattened now. I think that the technical analysis is essentially a joke, but you could tell that there is a chance that this has bottomed out. Effectively, if the case is dropped by the court in US, the Leo token should go up as long as Bitfinex platform remains viable. And I think this will be the case, and I think that the Leo token will continue going up in price. I think it has the most amazing economics among all the tokens, and I wish all the best to the Bitfinex platform. I'm really a big fan of Bitfinex platform. I can see a lot of benefits of using Bitfinex over some other exchanges, and I wish Bitfinex all the best. I think the Leo token will reach some really crazy valuations, and I think that the case of New York Attorney General will result in some big fine for Bitfinex for serving US customers, and it will result in US government getting a lot of data on these unverified customers of Bitfinex, and that will probably allow them to chase some criminals. It will allow them to chase some tax dodgers. I think that's the main result. It will allow them to track the addresses to the users, and they will be able to connect a lot of dots about which address, which funds belong to whom. If you have any comments, please put them at the beginning. Please put them at the bottom. Please comment, like, subscribe. As always, open a new account with a new email on Bitfinex, Deribit, crypto facilities with the link below that will give you 10 to 20% trading fees, which over the long run will save you a lot of money. Thank you very much for your attention.